All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about ULTY, specifically why I'm most likely not going to be investing more money into ULTY, at least for the short period of time. I've been building up cash in my position. I currently have about $5,000 Canadian in terms of cash in my margin account, which I could use to buy ULTY, which is a 107% yielding ETF from Yieldmax. Or I could choose to invest it into YMAX. There's multiple options here, but I want to talk more specifically about ULTY's share price, and I want to talk about why I don't like to buy falling stocks over time, which sounds contradictory because look, I buy YMAX. YMAX over time has gone from a $20 ETF all the way down to a $17 ETF, but it's shown in the past 3 months, for example, periods of time where its share price can remain relatively stable while paying out roughly 70% in terms of dividends. ULTY has not. And in this video, I want to talk about the share price of ULTY. I also want to talk about some stocks that I bought in the long run, which have trended down, which have not worked out for me. So I want you guys to watch this video and learn from my mistakes. And I think it's going to be very interesting. I have all the holdings of both YMAX and ULTY up, and I want to talk about everything in this video. So awesome, let's do it. We're up to 6,015 subscribers. We crossed over the 6,000 subscriber marker. So a shout out to us, a shout out to you. 465 subscribers in the past 28 days. Thank you very much, guys. This is awesome. To have a channel with 6,000 subscribers, I would never have thought this would have been possible, but I mean, we continue to work every single day towards it. And we're coming back with another video with ULTY. So let's get into it today. 107% yielding ULTY. But we are not looking to buy more. I currently have about $1,600 in terms of ULTY, roughly about 146 shares, or backwards, 164 shares. And the reason why I'm not necessarily looking to buy more ULTY is because the share price has trended down for the majority of the stock price. The stock chart history. And you'll notice here, look, down 51%. It's not really showing the chart here. Beautiful. We go to the 1 year. So it started as a $20 Yieldmax ETF. So did YMAX. You can see YMAX sits at about $17. ULTY sits at about $10. And sure, ULTY pays out a fantastic dividend, 107%. And when you're paying dividend yields this high, of course your share price is going to go down. If you need to have an underlying which appreciates more than 110%, let's say, or 107% in order to cover for that dividend, which ULTY's underlyings are absolutely not. One thing with ULTY is it's difficult to kind of determine their underlyings because they're always changing. ULTY goes through periods where it holds volatile stocks. It holds Apple. It holds Amazon here. You can see it holds Coin as well, but it holds a bunch of different stocks, individual stocks, and looks to basically use a synthetic cover call strategy on those stocks in order to collect dividends from them. But the thing is, they try to interchange and select different stocks based on volatility. And you'll see here, they hold about 15 to 30 different ETFs. I'm not sure if I can find that here but they basically hold 15 to 30 different stocks. You can see here 15 to 30 underlying securities, and look for volatility. All their stocks are volatile stocks, and I do kind of agree. Okay, that's why they're paying out these huge dividends. But when you're looking for volatile stocks, they can move very fast to the upside but very fast to the downside. And I found ULTY and the people at YMAX have done a poor job at selecting good quality stocks, in my opinion. And the reason I say that is because they're basically looking at stocks which have had massive run-ups or massive drawdowns, and they're looking to take advantage of that movement. But in doing so, there's a lot of volatility, and Yieldmax strategies don't play well to the downside. They play very well to a stock that trends up for a long period of time. That's why we hold YMAX, because it pretty much tracks SPY. Not exactly, but a lot of the top holdings in YMAX are the top holdings in the S&P 500. But when we look at ULTY, they're a collection of stocks which they're scattered all over the place. They have insane movements, but that can also be the downside of ULTY. They move too much, and when they move to the downside, it really hurts the stock price. Why did I buy it in the first place? I'm kind of bashing ULTY here, but why did I buy 164 shares in the first place? I wanted some skin in the game. I wanted to feel ULTY. I've held ULTY for a little bit now. You can see here my average price is $10.59. So I am currently up on this position because ULTY's share price is $10. They paid me a dividend of 82 cents, and my average cost per share is $10.60. So I've made about 20 cents per share off of this position so far. But with the high dividends that it's paying out, we're likely going to see a stock split in ULTY, and I'm not necessarily a huge fan of stock splits. And I've held stocks in the past, such as Walgreens, for example, which is why I want you guys to learn from my mistakes, where I actually bought Walgreens because I seen, look, over the past 5 years, Walgreens has been trending down. I thought it was a fantastic company. I was like, look, at the time, it was a $30 billion company. I was like, I'm buying it on sale. And you know what? The stock price kept going down. So I continued to buy. And Walgreens, for me, has been a very poor investment. You could see here, I'm actually down about 77% in my account because Walgreens continue to trend down over time. And ULTY will most likely continue to trend down over time and fast because of this super high dividend yield. And it's not all doom and gloom, because I did hold 3M. 3M was in a rough spot a couple years ago, and I kept buying as it went down. This is one example to show you how a stock has trended down for a decent period of time, couple years, and only recently has 3M really bounced back. You see, up 67% in the past year, and I am a holder of 3M, if I could find that here. And I'm now back to my break-even point pretty much, down only about 2%. So there's an example of how if you continue to buy a stock which continuously falls, it could leave you in a money pit, which basically it sucks up your money, or it could potentially turn around. But do I want to take that risk in ULTY when I have YMAX? I have an ETF which is performing very well. It corresponds pretty well to the market. You can see here, actually, okay, it was a bit down from the S&P 500, only going up 0.12% versus SPY's 0.42%, but I generally believe it corresponds pretty well to the S&P 500. It pays out fantastic dividends, and it doesn't necessarily, sure, the stock price goes down over time, but it doesn't go down extremely fast, and that's what we want to avoid in our Yieldmax ETFs. So this was just a little video to compare ULTY to YMAX, and why I'm most likely not going to be adding much more of ULTY until I see some kind of improvement in the share price and the returns. So if you guys did enjoy this video, let me know your comments down below. We're up to 6,015 subscribers. I hope to see you guys in the next video, and please do take care till next time.